I'm Trish Sullivan. I am the Global Head of Institutional Cash Management at Deutsche Bank.
Why is financial inclusion important in regards to cash management and trade finance? And could de-risking potentially hinder these efforts?
Well, that's a fantastic question, being here at the EBRD conference. EBRD has been front and center going back almost 20 years now in its efforts to mitigate de-risking. It's something that I take very seriously in my role as head of cash management and also of a sales force that's covering trade finance. So the trends in de-risking have been building since 2008, and the unintended consequences as well. But very recently, we've all been experiencing in a much shorter period of time the impact of tariffs, which can have similar unintended consequences like de-risking. So tariffs and de-risking both aim to mitigate an external risk. Both have been reshaping supply chains and capital flows and have unintended social and environmental consequences, which can be very disruptive to communities around the world. When you think about cash and trade flow, it's the artery, I call it the lifeblood of society. When banks have taken a step back to manage external risks and cut off certain banks, certain countries, that really has a very quick impact on the access those communities have to financial services and trade flows. And we are starting to see that impact in a much shorter period of time, as I mentioned, with tariffs now. So it's really important that we have the right policy response to de-risking, with FATF, with the World Bank, with EBRD, and making sure governments around the world understand the importance of a risk-based approach to compliance and managing financial crime risk so that banks can make the right decisions and have a risk appetite that doesn't have the impact of cutting off countries and communities.
How can banks like Deutsche Bank support such financial inclusion initiatives across cash management and trade finance?
So we are a big supporter of responsible financial inclusion. So I have built into my team a group of 70 people that are focused on non-financial risk management. And we launched a program in 2024 called the Ecosystem of Risk Management. We worked with our partner financial institutions to help them have the right financial crime compliance standards in place. We travel around the world, bring together our client banks in certain countries with policymakers, with regulators to talk about financial crime standards. And we share best practices with our clients so that they can stay safely banked. We view it as part of our license to do business to help our clients have the right standards in place so that they don't get de-risked and they can continue to support their clients and those important communities.